Hello, everyone, and welcome to another episode of Idiot Investor. I am your host, Justin Alexander, and we got a split today, or an announcement of a split. Google is, they reported earnings. It was very good overall. It's one of the stronger companies to own. Look at that chart. Ain't it beautiful? Wow. I got in at a pretty good time on Google. Let me see if I can pull it up, but definitely happy with where that's going. And I just wanted to talk about splits and some of the recent splits that have happened. So it looks like I was buying late 2020, and it's done very well since then. I don't know what made me buy it, but I put a full position in, and now it's up like 50%. So, but we're talking splits today. Apple is a good example. It did a 4-for-1, and that was in August 2020. That day was, all right, yeah, right here. So they rallied hard before the split, right here. And then it split, and then it kind of traded flat, somewhat down, but then it continued to take off. And, as long as companies like Apple, Google, Amazon keep successfully making money, it's going to keep pushing up the market. And a lot of people were worried that Apple or Microsoft would give bad earnings this quarter because a lot of those story stocks are down 50 to 80%, Peloton and Zillow. And so luckily those aren't taking the market because there's other large cap tech holding it up. And recently we've had a rally in oil stocks and financials. Of course, as soon as I sell ExxonMobil is when it rallies, another $10, another 30%. I sold it at $70. Probably the first moment it hit 70. Per usual, I should have held. But that goes to show you, if you really don't need the money, and the thing is, I don't really believe in ExxonMobil. I think long term, they're probably done for. But they're so large and oh well, we're not talking about Exxon because they're not splitting because they don't need to because their stock's only $80. We're talking Google, $3,000. And that's the reason why you'd split, to make it more accessible for people. Day traders will trade penny stocks and, they'll trade all day, and that's not what big companies want. They don't want that volatility. They want, just your stock going up, and they use stock to, pay their employees or do buyouts and stuff. So, it's very important for companies to keep their stock up. That's what I'm seeing, at least. Let's look at Nvidia. That's another one that was pretty expensive. It was like $400 or $500, I think. I don't remember how they split. It might have been like 2-for-1 or something. But a little more volatile on this one. It's up 100% for the year, 800% long term. So this has obviously been a great investment, unless you bought at the very top. But even then, you got lots of time. I started down here. I wish I would have bought some, damn it. Nvidia took a big hit when I first started, and I just ignored it, mainly because it doesn't pay a dividend, and it does a little bit. But we're looking at their split date, and just in general, my advice is the day it splits, buy it. You're getting that lower price that you've always wanted for these great companies. And even though Apple was, had a high PE at the time, it had rallied like 50% or something, I still bought it, and look at that, it's higher now. So I wish I would have bought some Nvidia. I've been wanting to get into that, but doesn't pay a dividend really. But it is a great company. So, but let's look at that. July 20th of 21. Yep. July. So that was right around here. It rallied hard. It traded down to flat. But it's a great company, so it keeps going up. I mean, the market goes up, the stock goes up. So when Google does a 20-for-1 split, I suggest getting in. Maybe even before if you can afford it, but right now I have fractional shares of Google, so I'm pretty sure when they split, they're just gonna fucking cash me out. I'm just gonna get cash for it, which is gonna be really annoying, but I can always get back in. You know, it's a tax hit, unfortunately, but that'll give you a chance to get in, you know, probably less than 200, I think, by the time it's done rallying. And then it'll maybe trade flat to down, so, you know, that could be a good chance to get in. But in general, splits are a good thing. It helps, you know, get more people in. It, you know, should pump up their stock. You know, technically, it's the same value, you know. You have twice as many shares now, but the price is half as much. But, you know, psychologically, that makes a big difference. The market has been very volatile this past month, January. You know, we had the big sell-off. I was buying all the way down, mainly in VTI. Best purchase was 215. The bottom was 212, and I even put an order in for 212. It didn't happen. So I was buying that well, because every other drop of the last year has been followed by a massive rally and a buying of the dip. So when you get those big drops and you're confident in the market and you got lots of time horizon, you don't need the money, you got plenty of money in your savings, and you really should be investing. That's just my advice, and if you are listening, then you probably are. But I think that's it for today. Thanks for watching, and hope you guys have a great week, and stay warm with the snowstorms, and all right, see ya.